Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow up 19, NASDAQ off 1, S&Ps are up $1.50. Gold contract up $1.50, trading at $1,304 an ounce. Silver off 11 cents at $20.62 an ounce. Platinum up 8 at $1,487 an ounce. Oil down 46 cents at $101.69 a barrel. Bonds, we have the 10-year off 6 ticks at 125.03. 30-year off 12 ticks at 138.09. King dollar flat at 81.12 after a couple days of huge signs of strength. King dollar, folks, is on her way to 81.50. I suspect we're going a lot higher, too. Euro is at 134. She's going to 132. Yen, flat at 101.87. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so Friday had an expansion of volume on the way down, which is very hard to do, by the way, in the summer. Today, what do you have? Contraction of volume, rejecting lower price, going against the last downdraft from the 17th of July. If we take a look at the SPY, this is what you have. SPY out here today, we're trading at 197.88. We've done 54 million shares. The 54 million, folks, is going into 145 million. So at lower price, which I do expect we're going to get, we are going to need more volume, though. So let's talk about here now. 197.92, that's where the SPY is right now. You get an hour left in the marketplace. Where are we going to go? It looks to me, this is what you have. The spike that we had at 13:30 this afternoon, we had 2.2 million shares on a 10-minute bar. Well, guess what? That 2.2 million, folks, going up to 4.8. Doesn't fly. What that sets up is that you'll get a slight pullback coming into the close. We're at 197.93. I expect you're going to be closing somewhere about 197.57. And what that's going to do is that you're still going to have low volume, but you're going to have a doji coming off that high after a couple days. What that will set up is that will set up a run down to the bottom of the July 17th area, which is 195.43, and we'll see if whether we get the expansion of volume as we move down there. I suspect we're going to be moving down there the next few days. We're going to take a look at the Dow Industrials. What do you have with the Dow? This is the way the Dow is set up. Dow Industrials got down to 16,877 out here today. Now, what the Dow has done is that the Dow broke the 17th of July. We broke, there we go, okay, MV. We broke that swing point. We will do, it looks to this point we're definitely going to do lighter volume. If we go back to the Dow again, we take a look at this. So what you're going to have here is that also would be a rejection of lower price. We'll see whether the Dow can actually get up and close over the 16,966. Right now you're at 16,986, so you're over it at this particular point. But as I just said with the S&P, the way that we are set up right now is that you can get a very slight pullback, but that slight pullback, Dow set up the same way too, the diamonds. So check out the diamonds. What the diamonds have done is this. The diamonds at 130, 163,000 shares going into 536,000 shares. So the way the diamonds are also set up is saying that the Dow Industrials also would pull back to the diamonds would pull back to the 169 area, which would get the Dow underneath that 16,966 level. Composite, the NASDAQ composite. We have what the composite is this. She's flat. Sideways move, can't get out of her way. Composite set up to go after the swing point, lower swing point from July 10th, as well as the swing point from July 17th. And composite also is going to need an expansion of volume for lower prices to stick. Right now, we're running 1.3 billion. That's light volume on the way down. If we take a look at the NDX 100, the 3 Qs, what we have with the 3 Qs is this. We are at 96.85. We've done 19 million shares today, which is light. Friday, we did 29 million shares. The way the Qs are set up, that's up 11 pennies right now. And the Qs are also set up to close out at, that'll give up about another 20 cents. So we have with the Qs. What the Qs did, the Qs got basically a little action. It was filling the gap. The Qs at 130 had 977,000 shares, but guess what? That was going into 1.9 million shares. So what that also sets up, intraday is 96.68. That's 78.88. That's another 20 cents off the highs that are out there right now. So it's going to be really cool watching how we come into this close, because this, folks, right now is very subtle. That's what it is. You have a Monday in the summer, after a Friday. Friday you were downtown, had expansion of volume. It's hard to get an expansion of volume flat out on Fridays or on Mondays. We got to take a look at the gold contract. What do we have with gold? So gold out here, flat market out here today. We are at 1305, and what you had with gold last Friday, folks, is what? Thursday, oh yeah, let's go through this baby. Thursday, you did 179,000 contracts. Well, guess what? That was going into its day of strength where it said 238,000 contracts. Rejected lower price, did it with lighter volume. That's the first part. Friday, you go topside, 131,000. Not that that's a lot. It's not. But what it did, it got it back inside the 1302 area. What that set up for is, I suspect we're going to not only go after the 1346. My take is that we're going to go up to the 1395. The gold and silver equities, bottom line, have been showing huge strength. Most of them are set up right now with very large ABC structures topside. Bond market. We go take a look at bonds. What we have with bonds is this. We take a look at the 10-year bond first. She's at 125.03. 10-year bond is going after the May 29th high. That 29th high is 126. This is this little baby, folks, not only wants it, but it looks to me like it's going to absolutely blow it away. It's going to be an ABC structure on the way up. And it's a decent ABC structure. It's a 5-point ABC structure, which will get the 10-year to 128. The 30-year has already basically, well, not basically, the 30-year has taken it out, has taken the 29th out with conviction. That was the 138.10. We're at 138.09 right now. It has volume. And last week at all those highs, we had volume 138.21, 413,000. 30-year. We take a look at this. The 30-year is, I believe, it's an 8.8 to B, which gets you into 142 for the 30-year bond. King dollar. So check it out. King dollar is moving with strength. What we have with King dollar is this. King dollar is at 81.11. Last week, what you did is that you took out the swing point. That swing point being 81.17. This King dollar right now is set up to go up and into the 81.50 mark. That's how this baby is setting up. 877-927-6648. We had a question in the den. Is the Fed window dressing coming up going to screw up the shots again? Bottom line, we do have window dressing coming up, no doubt about that. What I suspect we have here is this. The S&Ps, if we go back to the S&Ps again for a second, you're going to see how subtle this is. The S&Ps, in fact, if I put the SPY up, and you're going to see how this roll is happening. The SPY, what the SPY had done is this. The SPY had a huge expansion of volume July 17th. That expansion was 145. You go back up, make a high with 56. You had an expansion of volume again on Friday. Today's light. This roll is happening right now. And to answer the question, I say no. I say what you're going to see out here is that you're going to see not only a leg down. The leg down this week is going to be there. It's going to be fast, and it's going to be furious. 877-927-6648. Some of the high-volume stocks in a low-volume market. You have Apple up $1.49. Family Dollar's getting taken over. No, Family Dollar's taking over Dollar Tree, I believe. Family Dollar's up about $14.95. Micron Technology down $1.43. We got Dollar General down 17 cents. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow up 19 right now. Nasdaq's flat. S&Ps are up 2. Don't forget, folks, at TFNN, we start programming each and every trading day, 8 o'clock in the morning, 8 to 6 in the afternoon. Check it out. You can get it right on your cell phone at tfnn.mobi. And if you do enjoy the programming, folks, please tell as many people as you can. Okay. Armstrong Flooring. So check this out. AMI, I believe it was AMI. 1 second. AMI. Whoops. AWIs. There we go. Okay, so Armstrong flooring out here today, down 587. They design, manufacture floors and ceilings in the United States and across the world. We bring this up, you're going to see it. It's down 10%. And, you know, this is just another indication. Bottom line is that when you are looking at equities that are going higher and there's no volume up at those levels, guess what? You're going to get toasted and roasted. And when we take a look at this, I put this back on a 10-year basis. What you're going to see is this. You're going to see that, number one, the last time that it had any volume on the way up was $34.89. That's where this baby's going. That was August of 2011. You continued higher, no volume. And then what did you have, folks? You came off the highs with volume. If you want to see an equity that when you get selling and you come off the highs with volume, this is it. You went from 61 to 52, February of this year. Volume characteristic was 22 million. The next month, 24 million. Then you go sideways, holds up a bit, still huge volume though, 22 million, 19 million. You go higher, last month with 16. So the correlation is really clear. You go down with monster volume. You do a slight bounce, you get 16 million, guess what? It blows out of the water this month. You're already doing 20 million. This is going to break the swing point. It's going to break it with volume. And the thing that's intriguing, of course, is that they design, manufacture floors and ceilings. You can make the case that, hey, guess what? This is the housing business. Bottom line, when you actually take a look at their numbers, however, meaning how much they're impacted by housing, when I'm just looking at the numbers just coming across from 2010 to 2014, guess what? They've done the same amount of numbers. That's what it comes down to. They did $2.8 billion in 2010. They did $2.8 billion in 2014. Bottom line is that, you know, we'll see what else they do. But this was a stock that was higher with lighter volume. Now, let's go over to some of the home builders. You go over to Lennar. Lennar's down $1 out here today. And you want to see a setup? This is going to be interesting. Watch how this whole thing sets up. So, on the way up, builders were extraordinary, no doubt. We took a 5-year. You take a 5-year. We put this up. Builders, Lennar went from $12 straight up to $44. You know that's too much. I mean, bottom line, nothing goes up forever, nothing goes down forever. As Lennar was going up, folks, last time it had any volume on the way up was June of 2012. The high there was 30.69, 30.93. That's where this baby's going to come back to. Now, what's so cool about it is this. Is that right now we're going after a weekly swing point, and you're going after it, and it looks to me like it wants to break it, number one, but it looks like it's going to be a Tiger Gottlieb. It's going to break it with lighter volume. So we'll see how this is set up. On a daily right now, it's set up as basically a Tiger Gottlieb. It's going to have to get the A point is what? 44. I'm just ballparking this. 3. That's 7. Yeah, it's set up for 35 right now. And what it's doing, which is really cool, it's breaking a swing point with lighter volume, and then it's going to be going against, and this is where it's really cool, it's going to be going against the 18th of December sign of strength. You know, if you happen to have the out of time in the trade charts, you're going to be able to see this set up pretty clearly. The sign of strength that it had there, we had 14 million on the way up. So I suspect the lineup is set up really cool there for a couple of Tiger Gottliebs coming in. The 10-year right now is still at 2.48, which does what? Well, which keeps mortgage rates low. Gold. Let's go to the XAU, the HUI. XAU right out here today. What we have with the XAU is this. We're at 101.99. This little baby rejected lower price last week in a big way. This looks to me like it's a monster ABC up, folks. Your swing point out here brings you back to the January 14th level. That's 107.39. We are at 101. Your A point on this is 83, and conservatively your B is 101. I won't use the top of it. It will only spiked up there. But conservatively, if I use the 101, you're still dealing with, 18 points. Your B point is 98. Bottom line, you get a $1.16 into it. It's set up all over the place. To me, it looks like it's going to go to higher price and higher price very quickly. The thing that's amazing about our markets, there's no doubt about it, is that our markets absolutely are paying zero attention to whether it's Europe, whether it's the Middle East, whether it's Africa, okay? Let me tell you something, folks. That's going to make a difference. There's two different things that are making a difference here when I really look at it. The world at this point politically has some huge problems. So that is going to make a difference. Why? Because most of these large companies are doing business all over the world. So that's the bad side of it. The good side of it, for all you bulls, the good side of it is after you get a decent correction, the good side of it is, guess what? Guess where people are going to want to invest? The good old USA. Why? Because, folks, the bottom line is that you can go, if you go into Europe, they basically are going to, back off Putin. They think they're making like they're not going to, but bottom line, Putin's going to keep crawling across that continent. You go to, forget the Middle East. China, they have their problems, banking problems right now. That'll continue to grow. Africa, I think, is in big problems, and that has to do with just whether it's Ebola. That's going to sneak out of, if you've read anything about that, folks, okay, what has happened is that, from village to village to village, it's a wicked virus, and, people are scared. And, the articles that are out there, they're saying that they're scared that the doctors are actually bringing it in, and, if you just understand anything about humans in general, fear is a big problem, period. And unfortunately, when you're in the middle of nowhere, which a lot of these people are, well, guess what? The correlation, I can absolutely understand the correlation that a doctor comes in and all of a sudden you have a disease. Well, we know that that's not the case, but I can understand that correlation. Those things happening simultaneously. And forget Afghanistan. Afghanistan's gone. Okay? Wait, another year from now, we're going to be talking about Afghanistan for the whole thing folded again. That is going to have effects all over the place. Bottom line, on a longer-term basis, yeah, our money's going to get invested more in the U.S. Why? Because there's nowhere else to go. And, basically, you'll be able to get your money back. 877-927-6648. Let's go over to the banking sector. We take a look at the banking sector. Banking sector out here, the XLF right now is trading out at $22.92, still at its highs. We take a look. Look at this. Interesting. Ooh, this is subtle out here today. Okay, when we come back, we're going to bisect and dissect this banking structure. What we're going to do is that we're going to go into the weighting structure. Because, see, what we had out here today, you actually had an expansion of volume as you went lower, even though right now it's up 3 pennies. We were coming into the 17th, which had 34 million. We did 35 million today. Oh, yeah, they're moving it out. This is Tom O'Brien. This is TFNN. Stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get Honeywell down 52 cents. Walmart's off 18. You get Caterpillar down 84. Disney is up 92. You have Big Mac flat. 3M is up 43 cents. We go over to Apple. So what do you have with Apple? Apple right now is trading at $98.99. And what that's doing, folks, the all-time high in Apple, if we take a look at pre-split, is 100.72. We've hit 99.24. I suspect that is going to basically get in and hit that baby. Right now, it's the volume characteristic. It's not even close that it's going to basically be able to sustain price up here. The week of September 2012, we did 500 million shares, 500 million shares. Bottom line, you've done 45 million thus far today. What I expect you're going to see is that you're going to expect all of 55 million today. That's going to set you up for maybe 250, 300 million for the week. So we'll see how that test takes place. The last 3 weeks of Apple, this is what you had. You had 231 million the week of July 11th. You had 249 million the week of the 18th. You had 276 million last week. That basically doesn't stick up there. That's going to be a test of a high. with lighter volume, and we'll see how that shakes out inside the NDX 100 as well as Apple. But there's nothing like a nice, sweet, solid test. If you want to see a solid test that did come about, just look at Qualcomm. Qualcomm, pretty amazing. You don't, in this one, folks, it tested by the pennies, 6 pennies. It closed under the 81.66. The day that was coming out with earnings, it closed at 81.60. It had tested the high that was generated out there from the 21st of April. 21st of April, it did 5.9 million. Bottom line is that it did, let's see, there it is right there. It did 10 million. Oh, this is on the weekly. That's what's going on here. Watch this, because that was cool how we did that. Okay, so this is right there. We put it on the weekly. The weekly high out here was the week of the 25th of April. It had 60 million shares, and when that baby was testing it, it wasn't even close, but then it came off that high with monster volume on the way down. And right now, Qualcomm is trading at 75.78, and your first stop down here is basically 70. We'll see how it hits the 70. 70. Oh, this is interesting here. So check this out. Right now, the first stop actually was the week of January 31st. The high of that is 74.40. We did 80 million shares. Last week we did 80 million shares. Pretty amazing. That's going to be coming into that level. Now, the key is going to be how far can you get into 74.49. That's the highs of the swing low. That was created in January. And right now, we haven't hit it. So, if you're a bull, you want that to hit it. If you're a bear, you want to stay right above it. Why? That's the building cause aspect of building strength to get into it and basically take it out. Caterpillar, we go take a look at Caterpillar. We have a Caterpillar. She's trading at 103.97. And Caterpillar also gapped away. And what you're seeing, folks, is you're seeing more equities starting to gap away and basically taking back many months of trading and days. Caterpillar in 12 hours took back to April. May, June, July. It took back 3 months. With volume, by the way. Your swing point on Caterpillar is 100.72. It did 9.2 million shares. Your first gap away had 8.6 million. I suspect we're going to build some cause here, try to get into that level. And that's on a weekly basis. On a monthly basis, this has quite a way to pull back. What we have on a monthly basis is that if we take this on and put this on a 10-year basis, what you're going to see is that once she got over the 85 level, she came back hard with volume. She did that in August of 2011, and she's got a high volume low that's sticking out like a sore thumb. And this would be a great chart for you to look at to see that, number one, how if you can't bust them down, you're going to bust them up. You can't bust them up, you're going to bust them down. And this is about as clear as you can get. When this was going back topside the last 4 months, we were doing volume of 68 million, 81 million, 114 million. Guess what? You were going against 307 million, 177 million, 189 million. That's not just once. You're going against it again. You're going against 154 million, 157 million. That supply line up there is a monster. That's saying, guess what? We're going to go back downtown, and that's going to be lower price. Now, 3M, this one's going to get really interesting. Now, 3M came out, they came out with their numbers. They come out again, they just came out with the numbers. So, check out 3M. Now, what you have with 3M is this. We're at 145.53. We've been hanging up here since June. I suspect what we're going to try to do is that we're going to try to test the 146.25. That's on the daily, and when we put this on the weekly, watch what we have here. Now, we take this, I'm going to put this on a weekly. Now, what's really cool here is that because they already come out with the numbers, you can kind of, there's not a surprise there that they're going to blow away numbers. Next numbers don't come out till October. When we put this on a weekly basis, you're going to see that you've been over the highs substantially since April. Without volume, by the way, okay? your benchmark is 129.66. That's where this thing wants to go. So the real key is going to be wait for that test. You want to see it test the highs first. If you get a successful test, meaning that it gets above the highs, it has volume, don't even think about selling it. If it gets above the highs, has lighter volume, but stays above the highs, don't even think about selling it. If it gets above the highs, has lighter volume, rejects price, there you go. That's your trade. 877-927-6648. Let's go over to good old Walmart. Why Walmart? Well, you have the Family 3, Dollar General, they're getting together, and there's no doubt they get a lot of stores in the U.S., nothing like Walmart, but we do have with Walmart where it's 75,878, and this little baby is making its way back to the swing of 67. You know, so we'll see how we get down into that level, and that level, of course, is going to be important. Why is it going to be important? Well, the actual when Walmart broke out, it's been having it hasn't been having a tough time staying over that level, but it hasn't got much over the level. And what I'm talking about is that $70.25. Walmart had been in the consolidation. This is one of the longest consolidations I've ever seen, from 1999 until 2012. That's when its consolidation broke topside. When it broke topside, however, it didn't have the volume. So we've been at this higher level for a full 2 years right now. And you know, you can look at this when you're on a monthly basis, how clean it is, how high we are with lighter volume. And the longer that you go sideways, folks, at highs with lighter volume, what does that mean? It means distribution is happening. The larger funds are getting out. Bottom line, once they get cleaned out enough, guess what? You're going to see those equities. There's going to be no bids on the other side each and every time that we get a retracement. We go back to the gold market for a second. You got Rheingold Resources. Rheingold right now, the gold equities and silver equities, most of them folks refuse to back off. You have Rheingold Resources trading at 88.42, 89.89. It's going after it, and this little baby looks to me like we're going to have some action inside the gold and silver market. In fact, let's go look at the silver contract, because what has happened, well, continues to happen in the silver market, is that silver is much more volatile than gold. We take a look at the silver market. We are at 20.64 right now. 20.67 puts her in the larger range, the higher range. Gold is already in that higher range, and you know, we'll see whether she can get a few more ticks and get up to that level. If we take a look at Pan America, which is PAAS, that's a silver stock, decent indication of where silver wants to go. We're at $15.11 right now. This is also looks to me like it's a very large ABC structure in the way up. Your benchmark on this is 1563. If you take out 1563 with volume, last time we were up there, did not have the volume. But what it didn't do is back off a big way. It went after the highs July 10th. We got to 1597. You did 1.7 million. Well, you needed about 5 million. Yeah, well, no. Yeah, we needed 3.5 million. Backed off, though. Watch how it backed off. You backed off with 1.4 million. You backed off with 596,000. You backed off with 841,000. And then Friday, you start, well, you can make an argument that you had a low, 1 million, but that 1 million was going into the sign of strength of 2.8 million. It's going to be interesting. You know, these gold and silvers look to me like they want to get a lot higher. If you would like to test drive the gold report, folks, the way you can do this is come over to our website at TFNN, go to newsletters, go to investments newsletters. You can test drive the gold report, 30 days absolutely free. If you'd like to test drive my daily newsletter, Market Insights, go to newsletters, trading newsletters, Market Insights, test drive it 2 weeks. We're going to be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mob WBI in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We have the Dow Industrials right now up 16. NASDAQ is down 2. You get the S&Ps up $1.50. And as we come into this close, let's go over and take a look at the E-minis for a second. So we have all of us, let's see, ESU4. Okay, so the E-minis right now are set up. We are at 1973. You're up $1.50. And you just got back inside this lower range, meaning under the 1973 area. The 1973 area, folks, was the high that was generated at 850 on the Friday. So what I suspect you're going to see right now is they're going to try to push it into the bottom of that. And we can do 1969. That's where this thing is shaking out right now. And all that is, that was the first expansion this morning at 1120. We did that expansion with 49,000 contracts versus going downtown out there with 77,000 contracts. So I suspect what you're going to see, a little weakness coming into this close out here. What that will set up, by the way, it's going to set up a very subtle flat market that did have lighter volume. But couldn't hold it on price. If, in fact, that's what we get, I suspect what you're going to see out here tomorrow is that you're going to see an expansion of volume as we go down. Why is that? We talked about it a little bit earlier. It's the two separate days on the S&P on the 17th and 10th of July that you did have that expansion of volume on the way down. You came back up with lighter volume, and things are just basically in place at this particular point. The bears, rightfully so, you know, bottom line can say, oh, you're going into window dressing again, you're going into the Fed, is this thing going to basically blow topside again? The bulls can turn around and say, hey, guess what? We're at highs, we got a natural pullback. That is a nice setup, folks, to basically have both sides, have the bulls more favorable that they want to buy the dip versus the bears selling it. What you also have in place here, though, is this. You're in July. You're coming into September and October, and the numbers that the earnings that have come out are not extraordinary into the case that you've seen more downdrafts, gap-aways with huge volume than you had seen updrafts. What we have seen updraft-wise is this. You've seen the takeovers updraft-wise, no doubt about it. What that's all about, folks, is what? That's about cheap money. Okay, there's no two ways about that. The cheap money is there. If you can buy another company, this is the time to buy it. You can buy a house, this is the time to buy it. All of those things, no doubt. Hard asset, buy it. Companies, buy it. Rates go up. I'm in the camp right now that the bonds are actually still going to go lower. What is that going to be for a year and a half? Yeah, I suspect that's what it's going to be. But in the longer term, bonds will go higher. Right now, though, year and a half, I suspect we're going lower. Why? You get the 30-year that already broke the top. That wants 142. And the 142 in the 30-year goes like this, folks. The bulls, I would say that, listen, I think we're going to go higher than that, but the 142 is only ice. That would be a natural retracement on a market that had topped out in May of 2011, came down and did the retracement back. So it's going to be a really important level when we get up to that level to see, do we still have volume as the bond market is pushing higher? I can, to me, I can make the technical case. I absolutely can make the fundamental case also. And the reason you can make the fundamental case is that the world's going to hell in a handbag. And the bottom line, still at this particular point, is that when we take a look at the 10-year rate, you're only getting 1.5 in France. You want to give your money to France, you get 1.5. You want to give it to Germany, you get 1.1. You want to give it to Italy, you get 2.6. So check it out. You can give your money to Italy. I love Italy. okay, to vacation, not to give money. You can get 2.6 in Italy or 2.48 in the United States. Portugal, 3.5. Forget it. It's competition, folks, as to where money's going. And in this particular case, our rates are still way too high and the competition of the rest of the world. And I'm talking about an extraordinary way too high, not just a small amount. You're talking percentage-wise, you know, when we talk 1% or something, that seems small, okay? It's not small in the context of percentage-wise, meaning 50, 60% higher than the competition is in the aspect of large funds allocating money, foundations allocating money, states allocating money, colleges allocating money. You stay right there, folks. We're going to be coming right back with a lot of earnings for you. This is a big earnings week. The Dow right now is up 17. Nasdaq's down 3.5. You got the S&P's up $1 right now, and expect you to, you know, in the next couple minutes we're going to see that push down just a little bit more. And this is about as subtle as you can get. If we take a look at the SPY, the SPY right now is trading out at 197.77. That's going to set up a nice little doji. Couldn't get any traction out here. Volume, not bad. You're still under the 17th of July. That's the 198.10 level. We got to 198.09 today. You can make a case that, hey, that was the test of the high, had lighter volume. Either way I look at it right now, this is what you have. It's subtle. You're down on price. It's a Monday, Tuesday, Wednesday, Thursday. That's when you can expect you're going to see an expansion with volume, and I expect you're going to see that expansion with volume is going to be coming on the downward side. Some of the Dow stocks out here that we're looking at. So we have ExxonMobil. ExxonMobil is going to be interesting watching Exxon. Exxon is testing its highs. It's up $1.21 right now. If we do look at Exxon on a daily basis, it's saying, hey, that can basically get up and over that 104.61 area. Right now, you're at 104.39. We didn't hit this 104.61, so I expect we will. The benchmark, however, now this gets interesting. The benchmark actually is the day before, because when you get something that's that close, you got to take the highest volume characteristic, and that's 17.6 million. So Exxon's going to be a good heads up as to what is going to happen in the large integrated oils. If we do look at the XLE out here, she's flat out here today. So inside that XLE, there's something that basically is taking it downtown. Chevron, it's not Chevron. Chevron's down 30 cents, but that's not the end of the world. I see. You get Apache down $1.60. You got ConocoPhillips off 70. Devron is off 52. You got Rig off 60. Halliburton's off 82. Let's see what Schlumberger is doing. SLB. That was a little rocket ship. So, so Schlumberger, she's off her highs, but that's a strong stock. This is Tom O'Brien. This is TFNN. You stay right there, folks. I'm going to be coming right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great weekend, safe weekend. Let's make it a great week, folks. Let's take a look at one of our belief cards. This is by Natalie Goldberg. Follow what you love, and it will take you where you want to go. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials up 22, Nasdaq down 4.5, S&P's up $1.25, 1 point. Gold contract up $1.70, trading at $1,305 an ounce. Silver up 24 cents at $20.66 an ounce. That's 2 cents rather. Platinum up $9 at $1,487 an ounce. Copper flat at $3.24 a pound. Light sweet crude down 50 cents, trading at $101.59 a barrel. bonds. We had the 10-year down 4 ticks at 125.05, 30-year off 6 ticks at 138.15. King dollar flat at 81.12. The euro flat at 134, and the yen trading out there at 101.87. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. You got a little doji hanging up here after a couple days down. No big deal. We're at 1978. You did 585 million shares. That's light volume, folks, going into the 17th. What it has also, though, that's for the bulls, you get light volume on the way down. You didn't reject lower price, but what you are is that you're inside the 1981.80. That is the 17th of July. And for the bears, what that means is that, guess what? 1955 is gain. That was the low that was generated on the 17th. If we want to bring that correlation over to the SPY and take a look at the SPY, this is what you have inside the SPY. The SPY, we're at 197.80. It was up 8 pennies. We did volume out here today of 67 million. The high of the 17th was 198.10. We got to 198.09. This is pretty intense because you could make the argument that, okay, it was trying to test the highs, couldn't do it. I'm not necessarily going to make that argument. Why? Because I'd like to see it actually hit the 198.10. What the argument I will make is that you had a sideways move. You're inside the bar of the 17th. It couldn't take it higher. So what it's going to do is going to go after the 195.43. Now, at that level on the way down, you are going to need an expansion of volume. We did 145 million out there at that low. That is an expansion of volume pretty dramatically. We did 67 million out here today. So you can see that the type of expansion you're going to need is pretty substantial. The composite. What do you have with the composite? That was a flat market. It was down $4 today, but bottom line, that's a flat market. We are at 44. Oh, check this out. This is pretty cool. 44.44. Now, the lower range is 43.71. 43.71 was the swing high of March. We took those levels out. When we came down on July 10th, number one, we got to 43.51. You get underneath it. We also got underneath it when we went down on the 17th to 43.52. 52? Yeah, we got underneath it both times. Now, both of those times, what you had, let's see, the 10th. Watch how we do this correlation. The 10th and the 17th, and then we got to go back to March 7th. Okay, so if you want to see, we take March 7th first. Then you take July 10th and 17th. So I want to show you how you do this correlation as to where is the force in the marketplace. So first off, what we're going to need is this. We're going to need to say, okay, what type of volume did we go downtown on July 10th and July 17th? On July 10th, we did 1.6 billion. On the 17th, we did 2 billion. So the 10th, 1.6. The 17th, 2 billion. Now, what you have to do now is that you have to go back to the swing high, number one, that it took out, and that swing high that was generated on March 6th, and we'll look at March 6th and March 7th. So you go back, we take a look at those correlations, and we bring that back. So there she is. March 6th, you did, you're going to love this. Okay, so watch this. March 6th, you did 2.1 billion, and March 7th, you did 2.1 billion. Okay, so now what's that mean? So check it out. So March 6th and 7th, where we were coming, we got over that. You did 2.1 billion. Well, on the 17th, the first time we come down, watch this now. The first time we come down on July 10th, you did 1.6 billion. The 1.6 is going into 2.1, right? Not enough volume. What does it do? It bounces from 43.51. You bounce up to 44.51. Not a big bounce, but you bounce. You come down again. What do? We get an expansion of volume this time. You did 2.1 billion, which was the same. Still not enough to break it down. Why? Because you had been doing that 2.1 couple days in a row. You get another top one that we had was on July 17th. That put a little hole in it. Bottom line, you're going to need a 2.3, 2.4 billion to get inside of that level. I do expect we're going to get it. Why? Because what is sticking out like a sore thumb is the February 5th swing low of 39.68, as well as the swing low that was established on April 15th at 3946. Small caps. Let's go take a look at the Russell 2000, because what the small caps has done right from February has led on the way down. Small caps never took out their high, tested the high that was generated out here on the July 2nd area. If we actually just look at this, at the Russell, the actual index, what you're going to see, we'll put this on a couple-year weekly basis, a 3-year weekly basis, and what you're going to see is that we've been up at these highs since December of this year. You have, ooh, this is tricky. Okay, so check this out. This is interesting. Let me put this in a monthly for a second. I'll go through the weekly first. Okay, so this is what you have. The first month we did, at 12/12, we did 1.6 billion. At 12/13, you did 1 billion. And where the kicker is this, the month beforehand. Oh man, see, this is what gets interesting here is this, is that if you have my book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, you know that at swing points, that's where the market talks, walks, and squawks. Well, the month prior to the high, you had some good juice into it. And that's saying, number one, you're going to go hit the high. In this case, guess what? It hit the high, couldn't handle the high, with dramatically lighter volume. In June, we did 2.1 billion, then they made a high with 1 billion. Man, that's tricky. It's tricky. When I say tricky, what I mean is that that's unusual. Normally, if you're pushing into a swing point with volume, you normally blow that swing point away. In this particular case, you didn't blow it away, and then you did have an expansion with volume on the way down when the Russell went from 1204 to 1151. So with the next level here, look at this. We're right at it. So 1136 on the Russell. You get back inside that, which I expect we're going to get back in tomorrow. That's going to send the Russell down to 1082. The 1136 level, folks, was the highs of the lows that were generated in May. Now, that high was generated with 1.4 billion. That had been going into the lows and highs from February, which had 1.4 billion. So to see that characteristic, you come down with 1.4 billion, you go back topside, don't have enough juice, you come back down with 1.4 billion. What does that tell you? That tells you that you are building cause far lower price. Bond market, bottom line, 10-year, 30-year, they want higher price. The 30-year has already got higher price. 10-year, we're at 125.05. I suspect what we're going to see out of that is the 128 level. The 30-year, it looks like it's an ABC structure. Right now, 142 is game. King Dollar has some strength behind that move. We're at 81.12. I expect what you're going to see is about the 81.50 mark. You should stay right there, folks. Tigers from IBD is going to be coming up. Amy Smith. We have the Dow finish up 22. NASDAQ down 4. S&P's up $1.50. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to his subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The diagnostic box spread analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the diagnostic box spread analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finished up 22. You had the NASDAQ down 4.5. S&Ps were flat. And as we do each and every Monday at 20 past the first hour, we have our Tigress, Amy Smith from IBD. And, folks, if you haven't test drove either Investors Business Daily, investors.com. Come over to our website at TFNN. You can see the banner right on the right-hand side. You can hit that banner. You can test drive either the print edition, 2 weeks absolutely free, or the digital edition at investors.com. And since, folks, everything's digital, you can pick it up on your computer. You can pick it up on your phone. You can pick it up on your iTablet. It's an amazing website. Check it out. 2 weeks absolutely free. Amy Smith, what's going on?
Hey, Mr. Tom, I'm doing good. I had a nice weekend. How about you?
I did, thank you.
I saw a cute film. I'm not really a big Woody Allen fan. It's kind of hit and miss for me.
Okay.
But the most recent one is the very cute Magic in the Moonlight is the name of the movie. We are in the opulent French Riviera in the 1920s.
Okay.
If nothing else, I think your wife would get a kick out of it. It's just great clothes and fancy cars and views of these mansions and views of the oceans, and it was just really fun. It's very light and funny. Colin Firth and Emma Stone are in it, and we chuckled all the way through. It's just one of those kind of light, little funny, if you're in the mood to go out to a movie.
Okay. I appreciate that.
Okay.
So, our take on the market, IBD's take on the market.
We've got some upside days, then we get heavier volume down days. We've had mixed earnings, which we had some pretty big hits. We've had some, we got Facebook and Chipotle that were looking strong. We had Amazon looking weak. it's kind of a tricky market. We're chopping back and forth. I mean, I have to say it was nice today to see the market rally back off the lows. But,
Okay.
you know, like last Wednesday, the S&P made a new high, and the Dow was down because we had weak earnings numbers from Boeing and Caterpillar.
Yeah.
That's the kind of market we're in. We're in a sort of a choppy, not a lot of decision in the market.
And, of course, we're going to have a huge amount of earnings coming out. Chipotle actually did it, though, didn't it?
Yeah, Chipotle reported really well. Facebook reported well. Netflix was a little bit weak. We have some interesting ones. Spirit Airlines reports on Tuesday. We have Twitter, which has been, struggling technically. They've struggled to get new users. That's on Wednesday. Wednesday, we also have Whiting Petroleum. They are the biggest oil producer in that red-hot Permian Basin of West Texas.
Okay.
And then Thursday, we have your favorite. We got the GoPro. We got the wearable camera. Let's see if they can produce numbers on Thursday.
Yeah, look at that Whiting Petroleum. That's look at that thing. Oh, man.
Yeah, ticker symbol there for people listening in is WLL, Whiting Petroleum.
That has it all.
They bought Kodiak Oil and Gas.
Yeah.
The ticker symbol there is KOG.
Right.
Now, Whiting is the big granddaddy. They are the big one, the really big oil producer in the Permian Basin.
Imagine that. That's pretty amazing. And, when you think about it, folks, whether it's, 20 years ago, bottom line, there were just farms there. And now
That's right.
Everyone's a billionaire. So they're going to take in $3.3 billion this year. Not bad. Not bad.
Not bad.
So we got Tesla coming out too, huh?
And, the thing that'll be interesting, Tesla, according to their, their reports and everything, they're looking for growth now out of China.
Okay.
So we're really looking to see what they can produce. Today, the stock was up a little bit. It's kind of setting up in a cupless handle.
Yeah.
I don't know. They do face some competition from a smaller company. It's called Candy Technologies. The ticker symbol is KNDI. The difference between the two companies is night and day. Tesla makes the luxury car. It sells for about $121,000, I think the one that are marketing in China.
Yes.
Candy makes really small electric cars and little trucks. If you look at their website, it looks like a smart car. Looks exactly like a little smart car.
The Chinese are going to want the Tesla. The Teslas are beautiful. I mean, and what you have here, this is pretty cool. The 265, it'd be intriguing to see how this comes out, because what I like hearing is that it has a high volume high. They like to get tested. The cars themselves are beautiful. There's no doubt.
I think you might be right. You know why? We had an internal meeting this morning, and we were talking about some of the cars right now that are selling well are sort of the mid-size SUVs that are sort of high-end cars.
Sure.
But as you say, the Tesla, the Chinese love, the ones that can afford it are going to love the beautiful luxury cars. So let's see how many they've sold. I'll be really curious.
Yeah, there's no doubt. There's no doubt, because if they open up that market, now you're talking, right?
Well, you're right. And, there are a lot of billionaires in China. We think of it as being a struggling, a lot of regular people, but there's some very big money in China.
Oh, yeah, no doubt. MasterCard.
MasterCard reports on Thursday. Visa took a haircut on Friday, so I'm kind of leery on MasterCard.
No, I agree. I can see that, yeah.
You don't know. The one that I couldn't wait to talk to you about, because I think this one's crazy. It was up 42% today. Take a look at El Pollo Loco. The ticker symbol is LOCO, Loco.
Wasn't El Pollo Loco, wasn't that the guy's, restaurant in Breaking Bad?
No, that was El Pollo Hermano.
Okay, every time I hear that, I say to myself, man.
That was El Pollo Hermano.
Look at this thing. It was up $10. Oh, my God.
Yeah, now the reason this is a hot story, you guys are in Florida, so you don't see them.
Yes.
80% of their revenue is made in Los Angeles.
Wow.
80%. They have 401 stores, and they're all in California.
So they got a huge growth potential. Oh, my God.
The growth is, when you take a look at, the reason I'm hot on this one is because if you take a look at what Chipotle's done. Yes. This is another Mexican-themed restaurant, and it's considered to be, if you want to call it this, it's a little bit healthier fast food.
Okay.
It's citrus marinated, it's fire-grilled chicken. Yep. It's not the fried stuff.
Oh, cool.
So it's more healthy.
Right.
they raised $100 million in their debut. The last 2 days, this thing has gone crazy, Tom. I mean, it's trading. The story is good. They have a lot of room for expansion. We'll have to see what happens when they report their next earnings. But
yeah, they literally just doubled in 2 days.
It has.
1840, it traded on Friday. Then Friday.
Yeah.
Amazing. And
El Pollo Loco is the crazy chicken.
I love it. I love
That's what it's called.
Yeah.
It's the crazy chicken.
No doubt. Hey, now listen, did you make it up to Boston? And did you make it to Regina's?
I did. You know what? I was so disappointed, Tom. It was just too busy.
Yeah.
I had the taxi guy, and, I was there at like 3 o'clock in the afternoon.
Right. Oh, yeah.
It wasn't even lunchtime.
Oh, you mean Regina's was too busy, right?
Yeah. I had the taxi guy drive me right there, I said the line was down the block.
I know. It's wicked. It's a great, well, maybe next time. I had to be up there on Friday. Something personally came up, and what happened is really wild, folks. I did the same thing. It was at 1:30 in the afternoon. The line was out the door, but I went on the other door because I know the place so well, and there was one seat at the bar, and I snuck in.
Oh, that's how you, okay.
And then you still, the guy's still all over you. Do you know what I mean? But that's what does. You always got to look at the bar, and what you do when you're facing Regina's, right? What you do, where the line is. Don't go to that door. You go to the other door where people go out, and you can look at the bar right there. If there's a seat, then just go.
That's what I did wrong.
You didn't do anything wrong. Next time.
Okay.
Next time. Listen, folks, come over to our website at TFNN. You'll see investors.com. Hit that banner. 2 weeks, either the print edition, the digital edition. Amy, you have a great week, safe week. Look forward to speaking right here next week.
You too. Take care, Tom.
Thank you. Okay, bye-bye. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless investor on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up 22, NASDAQ down 4.5, S&P's flat, as we do each and every Monday at 40 past the second hour. We have our man, Mr. Chad Coco. Chad, folks, does the best option show on the planet, sponsored by TD Ameritrade, Think or Swim, every Tuesday right here at TFNN. It's noon to 1 Eastern Standard Time. Now, you can get all the programming at TFNN right on your cell phone at TFNN.mobi. We have live programming from 8 in the morning to 6 in the afternoon. Chad is on from 12 to 1, sets up some great strategies. If you haven't test drove the Think or Swim platform by TD Ameritrade, come over to our website at TFNN. You're going to see the banner on the top, on the side. You can hit that banner, bring up the account. They'll put funny money into your account so you can see exactly how dynamic the Think or Swim platform is. I use it each and every trading day, whether I'm trading equities, futures, commodities, or currencies. It's all on one platform. Chad Coco, what's going on?
Oh, thank you. Nice welcome on. Kind of a rough day in the market today, huh? Big old drop and rallied right back.
Yeah, you know, I like what happened out here. You know, I particularly like what happened, you know, when I look at the S&P, it's subtle, but the bottom line, you know, it's like couldn't hold price here. Do you know what I mean? So we'll see whether we can get an expansion of volume. You know, my take is that we want to go a little bit lower, but that's been my take for a long time, Chad.
Mine as well.
Hey, man, I got to tell you, I love your name, man.
It's kind of fun, isn't it?
That's a cool name. It really is, man.
Try write that out in cursive, though. So many C's and O's, just loop and loop and loop.
It's a great name. Seriously. So, you know, market-wise here, there's no doubt that we've been up at these highs. We've been, you know, for quite a while right now. You're coming into, of course, the not the end of the summer, but it is interesting that every year it seems that the summer gets a little bit shorter. I remember years ago that it was always Labor Day. Do you know what I mean? That you knew people were getting back to work. But many times lately, it seems like about the third week of August, people are getting back to work just because the way that the a lot of these schools start a little bit earlier. Do you know what I mean? So it's going to be interesting to see how we do shake out the next month.
This is very true, yeah. So hopefully it builds up a little bit more volatility, a little bit more in the market movement, just more for us to play with.
No doubt. And, of course, that can be, when we're talking the volatility, folks, we're dealing with 12.56 right now. You had that spike on the 17th that went from 1085 to 1538. We had talked about this, last week, actually, that, folks, like to trade this. But, folks, there's so many other better vehicles because what happens with the VIX, if you're going to be basically trading it, is that you always have to be in before that fact. When, if you're listening to Chad when he's on Tuesdays from 12 to 1, he sets up many strategies, and inside that Thinkorswim platform, the types of strategies that you can set up, you don't have to depend on just throwing the dice in one spike in the marketplace, because the bottom line is that whether the VIX is high or low, there's different strategies that are set up that will give you a higher probability that your trade will come on like you want it to come on. What's interesting, Chad, is that what we have had, even with the Dow still at highs, you've got a lot of these Dow stocks that basically given up. Boeing came back pretty hard from 140 to 123. You had United Technologies come back pretty hard. So it's kind of intriguing, that inside the Dow, which normally doesn't move that much, we have had some fairly large movement.
Sure have, yeah. It's always nice to be able to pick a direction on a stock. That's the benefit of options. We don't need to be able to just go long or just go short. We can go sideways. We can go a movement up or down. Doesn't really matter which way. Definitely a benefit with trading the options and something like that.
Yes. And hey, let me ask you, in the summer, there's been a lot of stories that the retail investor is trading a lot more. Is the weekly options still going up versus the monthly options? How is that playing out?
Are you talking about the volume in terms of the weekly
Yes, I am.
Yeah,
yes.
They're actually, it is increasing almost every month, actually even every week.
That's amazing.
There is always a downturn in the summer, but we're not really seeing much of that. It's still a lot more volume than there was this time last year.
Man, it totally makes sense, folks, because if you haven't traded, or if you trade the monthly options and haven't traded the weekly options, folks, and you want liquidity, this penny-wide deal inside the option market is pretty amazing. When if we just look at the Qs, the 3 Qs, you're talking about something that trades at $96.77, but yet inside the option market, the spread is a penny, folks, okay, which is just, isn't that a mind blower? I mean,
it really is.
Yeah. It's really cool. Listen, folks, tomorrow, 12 to 1 Eastern Standard Time, no matter where you are, just get on your cell phone, TFNN.MOBI. Chad, you have a great night, safe night, and, of course, we look forward to the program tomorrow.
You as well. Be happy to be there.
Okay, man. Have a great one. Have a safe one. HLF, okay, let's take a look at Herbalife. Herbalife just come out with numbers. Herbalife closed at the $67.48. She's trading at $62, $64 right now. They're claiming they made a huge amount of money. We'll see where that shakes out. Bottom line, this always cracks me up when you have there she is right there. Okay, so let's see, the estimate was second quarter. So the estimate was 157. They say they made 155. And what I'm going to be looking for, let's see, is the revenue number, because the net sales, $1.3 billion, adjusted earnings per share, 1.55, 1.3. Where is she? It's always the revenue, folks. The revenue is harder to basically fudge than the... There she is. Okay, so Herbalife sees year-adjusted 617 to 632. The estimate was 630. Yearly sales up 8.5 to 10.5. They saw 10 to 12. That's a big number. Currently, they have $232 million left remaining of their $1.5 billion repurchase authorization. So check this out. This is pretty cool. So they've spent $1.2 billion on their stock. And if we take a look at this, and we'll put this back 3 years, what you're going to see is that, let's see, how long, I wonder how that's been going on. If we put it back a year, depending on how long it is, they could be in a it's a close call whether they're in a winning position or a losing position. I'll do a little more work on that, on their equity. The way this equity is set up, though, is that, bottom line is that the Ackerman didn't win when he came out with that presentation last week, but the way that this is set up is that on a longer-term basis, it looks to me like he's going to win. We're at $67. This stock wants to go to $26. There's a high volume low out there that's sticking out like a sore thumb. And man, is it sticking out. So this is going to be a great one to watch to see exactly how this shakes out and who's going to win this battle, because there's no doubt that battle is out there. And right now, we're $62. That's not the end of the world. And it is, as one of our Tigers says, crazy to trade that stock. Yes, I would not be trading that stock. There's no doubt about it. This is something you want to watch. There's no doubt about that. Do not get in the middle of those sharks. What happens, folks, you get in the middle of the sharks, guess what? You're going to get eaten. And in this particular case, when we're talking about HLF, you got two of the biggest sharks that are probably in the marketplace out here. And that would be Carl Icahn and Bill Ackman. That's what it comes down to. What is interesting here is this, though. So check this out. Just pulling this up. Fidelity is moving out of the stock. And this is going to get interesting because 725, they moved 452,000 shares yesterday. 25, they moved them on Friday. And because they own more than 5% of the stock, they have to file every single time they move it. Now, it's not the aspect that they did 452. You know, I've followed Fidelity for years, meaning I just don't follow them. What ends up happening is that between them, MFS, State Street, they're all on the same block. We were actually on the same block when I was in Boston in 1981. I have a decent understanding of how they trade. What happens is this. It's one of the largest operators in the equity market. When they step into something, they step into it big. When they step out of it, guess what? They step out of it. They don't sell once. They get 11 million shares. They don't go in there and sell once. They know that when they made that 500,000 sale on Friday, they know that's going to stick out like a sore thumb. I suspect what you're going to have, I haven't read it yet, but I suspect what you're going to see out here in the next few days, guess what? You're going to see a headline, Fidelity starts selling this baby, you know. And if we go look at, let's see, 320, 630. Oh, look at this. This is wicked. You did the other side of that headline, though, which is Capital Group, this American funds. They turned around and they bought 468,000 shares on June 30th. Those are the two latest filings that are out there that basically had a file. Here's May 30th. Who's that? Credit Suisse. Bottom line, Bulls and Bears, they're fighting. They're going to be fighting like crazy. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. We ended out. Finish up 22. NASDAQ down 4.5. S&Ps are up 1. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. Don't forget, folks, at TFNN, we now broadcast 10 hours live each and every trading day. That broadcasting starts at 8 a.m., folks. We got our man, Mr. John Logan, with the Global Market Pulse that kicks us off. You can get all of that programming live right on your cell phone at TFNN.mobi. My own hours, we changed from 4 to 6, which I've done for approximately 17, 18 years. I'm doing 3 to 5 right now, and I just absolutely love doing that last hour when the market is open. If you'd like to test drive my daily newsletter, you can do that by coming over to our website at TFNN. Go on to newsletters, trading newsletters. You can test drive the Market Insights 2 weeks absolutely free. So let's go overseas first. Let's go to the FTSE in London. We take a look at the FTSE. FTSE out here today, flat day, folks. We're at 67.88. Now, the FTSE had tried to take out its highs 4 different times in the last 6 months. Couldn't handle it. What do you have out here today? And this is where it's subtle. And this is really, I'm digging what's happening right now because these subtle moves, they're hard, a little tricky to pick up, but bottom line, inside the FTSE today, you get an expansion of volume as you did go lower. What the FTSE did is 662 million shares, expanded from the 540. What is that setting up? We're at 67.88. That's setting up a run down to the swing low of the 10th, which is 66.43. The DAX in Germany, we take a look at Germany. What you have with Germany is this. She was down 45 bucks today, and we did about the same amount of volume. The DAX in Germany, however, has got into its lower range. The DAX in Germany is at 95.98. She has a high volume low at 89.13. That 89.13, that wants to get tested. You know, we'll see what type of volume we got on the way down. Couldn't handle its highs, though. That's the real bottom line. Couldn't handle its highs. And the DAX in Germany, for some reason, folks, likes to trade. The NASDAQ likes to trade like it. It's really wild watching this shake out. The next benchmark on the DAX is at 8,100. I suspect that's where we're going to go. The real key is, as we get down there, will we have an expansion of volume as we get into the 8,100? Where I'm getting 8,100 for, by the way, is this. That was the highs of 2008. We broke over those highs. Now, watch this. We had 4.9 billion shares at that high. We took that high out, folks, with 2.3 billion, and we did that about 14 months ago. So we've stayed at highs for 14 months with no volume. You had the expansion up from 7,800 up to this level of 88 and 88 to 98, and we've been the DAX in Germany has been at that level for 9 months. If we get an expansion of volume as we pull down, what that does, first off, is set up, you're going to be in the lower range, and the real key is once you're in the lower range, how far down can you get and go? Gold market out here, gold market's held really well. The gold market looks to me like we have very large ABC structures on the way up. I suspect the pullback, by the way, it was really a slight pullback. Now, all that pullback was happening in the gold market is that you were coming back into the huge sign of strength that you had on the 19th of June. 19th of June, gold went from 1276 to 1322. You did with monster volume. I believe it was 238,000 contracts. When we pulled back down last Thursday, you pulled back down with 179,000. So 179 was going against 238, and it couldn't even get to the low, and that's what markets like to do, folks. When markets break topside, they have to come back to this sign of strength. Most of the time, they come to the bottom of it. That's what the market will talk, walk, and squawk. Does it have heavier volume, lighter volume? Does it reject price? In this particular case, we never made it back to the lower part of the day of strength, which is 276. We got to a price point of 287. Now what has gold done? What gold has done, folks, is got back inside the larger range. The larger range is 1302.20 on this contract. We're at 1303.80. What does it set up? Your 8-point on this is 12. Well, what it sets up, what's hanging out there is 1392. 1392 is the swing high from the 17th of March. And what you do have is this. The gold equities and the silver equities are actually stronger than the metal. When you see that happen and you see the equities refuse to back off, most times what you have in there is that the equities are going to lead the metal on the way up. And, it moves both different ways. But with the aspect that the equities would not back off as the gold contract was coming down tells you quite a bit. Now, in the context of the GLD, this is huge. The context of the GLD, which is State Street Trust, since 2011, this is the first time that it continually, meaning the trust itself, is buying gold in the marketplace, physical gold in the marketplace. As the gold contract goes up, GLD goes up, guess what that means? That means, bottom line, that what you have to do as the GLD goes up, the GLD has to go in. They have to buy more gold. And what does that do? That sustains the gold price, number one. That keeps the trend going higher. And as they buy more gold, then they have to buy more gold again. Because as they're buying gold, physical gold, at the end of the day, what does it do? It spikes the price overnight. You spike the price overnight. And this is why you absolutely want to wrap your head, folks, around how the ETF structures work, particularly how the gold one works, the silver one works. Why? Because it's such a small market, folks. So when things are going with you on the way up, it's great. When they're going against you, it's the disaster, because that's what you had happening inside the gold market for approximately 2.5 years. As things were going down, guess what? It's natural. They had to sell, sell, sell. As this is going up, that has turned going up. What you also have inside that future market itself is that the actual speculators have been going long and putting more pressure on that gold market. What I expect you're going to see, and that's without India and China being involved, period. Okay, so what we've had there is that you've had pockets of buyers in the market, but the biggest natural buyer is the GLD, and I suspect that's not going to change. You know, that's how this is basically laid out at this particular case. What is really impressive is that we had the dollar go topside. Gold didn't take the hit. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being there, folks. You have a great night, safe night. Look forward to speaking right here tomorrow. Go get them, folks.